First of all, let's see the history. Which was the first bank in India, how the banking system started in India, and what are the chain of banks. So, banking in India started back in 1770 with the establishment of Bank of Hindustan, and after that 3 more presidency banks were set up. They were Bank of Kolkata in 1806, Bank of Mumbai in 1840, and Bank of Madras in 1849. Now, these banks worked as quasi-central bank for many years, but in 1921, all the 3 banks were amalgamated to form an Imperial Bank of India. Imperial Bank continued functioning till 1956, and after 56, the Imperial Bank of India was named as State Bank of India. In 1926, the Royal Commission of Indian Currency and Finance was established under the chairmanship of Hilton Young, and under this commission, the RBI Act was passed in the year 1934, and from 1st April 1935, RBI, that is Reserve Bank of India, was established. Initially, that is during the period of 1935 to 1937, the headquarters of Reserve Bank of India, that is RBI, was located at Calcutta, and after that it was shifted to Mumbai, that is the present headquarter. Now, RBI worked as a central bank for more 3 countries, that is Burma till the year 1944, Pakistan till the year 1948 July, and Kuwait till the year 1959. In the year 1956, the Imperial Bank of India was renamed as State Bank of India, as said earlier. The nationalization of bank took place in 1969, and 14 private banks was nationalized in the year 1969, and in the year 1980, 6 more were nationalized. And in 1993, New Bank of India and PNB amalgamated to become PNB. PNB is Punjab National Bank. Now, let's see what was the reasons for nationalization of bank. So, the 3 main and important reasons for nationalization of bank are concentration of economic power in few hand, as all the economic power was in the hand of bank, all the private bank, and they were just giving the loan where they got more interest or more profit, but rather not in rural area. So, the concentration of economic power in few hand, this was one of the main reasons for the nationalization of bank. The other is private ownership of commercial bank, and the last one, but not the least, is previously located in urban areas, thereby neglecting the development of agricultural and rural area, as it was not the priority sector. So, all the banks, they used to give loans where they got the profit, and even they used to focus on the development of urban area rather than agricultural and rural areas. So, these are the 3 main reasons for the nationalization of bank. So, now let us see what is the progress after nationalization. So, the 4 major progress are expansion of number of branches, priority sector leading increased, the level of deposit, mobilization and bank lending increased, banks started financing scheme which promoted entrepreneurship, that is startup business. So, these are the 4 main progress after the nationalization of banks. After, see, this is the banking structure in India, where the central bank or the apex bank is RBI, Reserve Bank of India, under which it comes 2 banks, that is scheduled and unscheduled bank. Under scheduled bank, there comes commercial bank and cooperative bank. Commercial bank are further of 4 types, that is public sector bank, private sector bank, foreign bank and regional rural bank, whereas cooperative banks are of 2 types, urban cooperative and state cooperative bank. The public sector banks are SBI and Associate Bank of SBI, other nationalized bank and other public sector banks, whereas private sector banks are the old private sector and the new private sector bank. And what is the foreign bank? Most of the foreign bank are focused on trade finance or external commercial borrowing, wholesale lending, investment banking and treasury services, whereas the regional rural banks they focus on agriculture and other rural sector. The banks are like NABARD, and it includes Paschim Banga Gramin Bank and etc. Now let's see the present banking scenario, that is in 2020 what are the number of bank in its sector. So all the nationalized banks, State Bank of India, private sector bank, foreign bank and regional rural bank are under the scheduled commercial bank, as we have seen earlier. Under this there are 22 private sector bank like Axis Bank, City Union Bank and etc. presently in India. There are 3 local area bank like Coastal Local Area Bank, Subhadra Local Bank and etc. Number of small finance bank are 10, and these include bank like Fincare, Small Unit Bank and etc. Currently we have 5 payment bank in operation like Paytm, Airtel Money. There are 12 public sector bank like Bank of India, Canara Bank. There are 4 financial institute like National Housing Bank. Number of regional rural bank in India are 43, and number of foreign bank which have branches or presence in India are 44. So we have 22 private sector bank, 3 local area bank, 10 small finance bank, 5 payment banks, 12 public sector bank, 4 financial institute, 43 regional rural bank and 44 foreign bank. So now after this, let's see what is RBI, Reserve Bank of India, that is the Central Bank of India. RBI was established in 1935 in accordance with the Reserve Bank of India Act 1934 and is India's central banking institute. RBI is entrusted with a variety of roles including overseeing of monetary policy, regulation and supervision of financial system and the payment system, management of foreign exchange, issue of currency, promotion of national objectives, crediting short-term loans to government. The Reserve Bank of India was first set up on the recommendation of Hilton Young Commission. It started operation on 1st April 1935 during the British rule, and the first governor of RBI was Sir Osborne Smith, and he was the governor of RBI from 1935 to 1937. Reserve Bank of India started as a shareholders company, but it became nationalized on 1st January 1949, and this was under RBI Act or Transfer of Public Ownership Act of 1948, and thereafter it's fully owned by Government of India. The first Indian governor of RBI is C.D. Deshmukh, and he was the governor of RBI from 1943 to 1949. Now the emblem of RBI is a tiger. Earlier it was a lion, but presently it's a tiger and a palm tree. Manmohan Singh, that is Dr. Manmohan Singh, is the only Prime Minister of India who was also the governor of RBI. And the headquarters of RBI was shifted in the year 1937 from Kolkata to Mumbai. We Cracku provide free mock test for SSC CPO exam. For that, you only need to Google search Cracku SSC CPO free mock test. Click on the first link and start the mock. After completing the mock, you get the complete detailed analysis with the solution and percentile for the mock. What are the functions of RBI? So there are 7 major functions of RBI, that is issuing of note, that is the currency notes. So central bank, that is RBI, enjoys monopoly right of note issuing. It issues currency note except 1 rupee note or coin and coins of smaller denomination. The other is banker of government. RBI acts as banking agent and a financial advisor to the government, government is Government of India, as RBI buys and sells government securities, that is G section, G-secs. Now the other is bankers bank. All the other bank in the country keep their part of cash balance with the central bank, that is RBI, as deposit to meet the liabilities in the time of crisis. So RBI is also bankers bank. After this, it is the lender of last resort. That means RBI is not only the bankers to the bank but also a lender of last resort, like whenever required RBI lends to the bank. The other is custodian of foreign reserve. Central bank, that is RBI, functions as the custodian of national foreign exchange services. The other is control of credit. RBI controls the increase or decrease in the volume of the credit money according to the monetary requirement of the nation. And the last function is regulatory and supervisor of the bank. RBI has the regulatory power under RBI Act and Banking Regulation Act of 1949. So after the function of RBI, let's see what are the liabilities and what are the type of liability. So type of liability on any bank is demand liability. These liability are which bank have to pay on demand, and they are like current deposit demand liability, portion of saving bank deposit, margin held against letter of credit or guarantee, balance in overdue fixed deposit, outstanding telegraphic transfer, that is TT, mail transfer, MTs, demand drafts, unclaimed deposit, credit balance in the cash credit account, and deposit held as security for advances which are payable on demand. So these are the demand liabilities. And the other is time liability. Time liability is to pay after a specific time period. So what comes under time liability? It is fixed deposit, cash certificate, cumulating and recurring deposit, time liability portion of saving bank deposit, staff security deposit, margin held against letter of credit if not payable on demand, the deposit held as security for advance which are not payable on demand, and gold deposits. These are under time liability. Now the other deposits that are other than demand liability and time liability is called other demand and time liability. So this include all those miscellaneous liabilities which are not covered in the above two type of liability. So these are interest acquired on deposit, unpaid dividend, suspense account balance showing the amount due to other bank or public participation certificate issued to other banks, and cash collaterals. So these are other demand and time liability. Now the percentage CRR, that is cash reserve ratio, and SLR, that is statutory liquidity ratio, that a bank has to maintain is actually a percentage of net demand and time liability of that bank. So with this, hope you liked it, and if you did, please like, share and comment. And yes, we also provide all the previous year paper of SSC exams like SSC CGL, CHSL, CPO, Stano and etc. with detailed solution, and the link is given in the description box below. Till then, don't forget to subscribe to our channel and press the bell icon for daily updates. Thank you.